We're going to go over SMTs very quickly, and I will explain how they work, what they mean, how to tell when they're bullshit or not, and yeah. So in this example, I'm going to have two charts right here, right? And so I have the S&P 500 and then NASDAQ over here, right? So the question is, what is SMT divergence and how can I use it in my trading? So what is SMT? We talked about this. Is a smart money technique, smart money tool. And so that's what this stands for, right? SMT. And then divergence just means a discorrelation in something that's correlated. So in this case, right, when we're looking at NASDAQ, let's say we had something like this, right? On ES, we would have the exact same thing like so, right, with the same pattern like that, right? So they look very similar, okay? And that is what correlation is. But when we have SMT divergence, I want you to just take a look at my drawing real quick. So let's say we had something like this, okay? So right here we have our key levels, right, for liquidity. And let's say on NASDAQ, we swept those levels and then we went lower, right? Imagine it like this, right? Boom. Right, we go lower and then we want to go up, but let's say we fail to take out those highs. So with that in mind, I'm going to change the color of my drawing tool. So I'll go red. Actually, I'm going to go green so it's a little bit more visible. So we had this high right here, and then we had this high right here. And we came up and we swept them, right? So we swept out the highs. So I'll just make a little check mark or something, right? So we swept the highs. And then we had this high, and then we had this high. But as you can see, we failed to sweep them on ES, okay? So that tells us we're heading lower, and that's what an SMT is. SMT divergence is when you take out a certain key level on one of the two, and then you don't need to on the other pair, okay? So that was my in-chart drawing example, and I'll show you some actual real examples on the chart, okay? Okay, so I've got an example for you guys. This one's not as of a dramatic example, but it still works. So with this example right here on NASDAQ, we had this level right here. Okay, and then on ES, we had this level. So these are the same levels, right? This is December 22nd of last month. On NASDAQ, we basically took out the level, and on ES, we did not. So the way you would mark this out with a drawing, I guess, would be you take your line tool, your trend line tool, and then you mark the level that got swept, and then the sweeping leg, I guess, right? So it'd look like that, and then it would be something like that. So if let's go down to the 5-minute. So this example, now that I'm on the 5-minute, actually does happen to be at the start of a session. So New York opens right about here, and as you can tell, we went a lot higher on ES, and then yeah, we just continued higher and we went bullish all day. That was the in-chart example. Hope that made sense, and that's what SMT is.